Good morning. Guten Morgen. Hola, Jumbo. Ohio. So it is, what is it, a Tuesday, I guess, right? Is it Tuesday? Yeah, I think it's a Tuesday, the 27th of April, 2021. Welcome to Forex.Today, the YouTube community of over 18,000 foreign exchange traders. Today we're going to cover technical analysis, fundamental analysis, trader psychology, answer your questions. Most likely we'll cover euro dollar, pound dollar, CAD dollar, Aussie dollar, Kiwi dollar, Aussie yen, Kiwi yen, euro yen, CAD yen, that kind of stuff. Bitcoin, gold, oil, all that kind of stuff. So let's go. Let me remind you that trading and investing, these activities are risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Welcome, welcome, welcome. Thank you for being part of the Forex.Today YouTube community. Thank you for the hard work that you put into this thing called Forex. Many of you are trying to become professional traders, whether you're managing your own money for a living or managing other people's money. Nonetheless, this is a tough gig. Nobody said it was easy. But I believe the goal here, or the way to reach your goals, is through conservative, disciplined, repeatable trades that are planned in advance based on your careful research. And if you buy into that, you're in the right place. If you want to get rich quick, this is not the right place. What we're focused on is value creation and longevity. Cool. One day you're going to find the success that you need, the confidence that you need, and you're going to say, hey, man, I want to trade real money. And at that point, you're going to have to find a broker that you trust, one that doesn't trade against you, for example, one that enters your trades quickly, one that doesn't slip against you. Hey, Trader's Way has earned my loyalty and respect. Maybe they'll earn yours as well. The way to check that out is visit tradersway.com. Open up a demo account. It's in the bottom right-hand corner. Click that, open it up, download MT4 or MT5, and practice. And when you're ready, you'll have an execution partner for your brand new successful Forex trading business, tradersway.com. Oops, there, you're over there. Hello, hello, hello. All right, let's get this. Got to move this over there. Coolio. I think we're almost set. Let me get some more coffee. Hey, Hattie. Welcome to the family, Hattie. All right, so Aussie has lost a little bit. Euro sort of lost a little bit. Kitty cat still ripper hot. Nice. Pound kind of working its way. Okay. Kiwi, wah, wah. Right. Swizzy, wah, wah. So here's what it's really coming down to. Yen and dollar are still weak, as we want, as we like, as we have planned. Looks like yen's a little weaker. That's fine. Remember, I was never saying Japanese yen strong. What I have been saying is what I'd like to see over the next 90 days is dollar getting weaker than yen. So relative, yen might look strong, but it's not actually strong. And then comparatively, compared to everything else, you can see it is weak. Even if dollar is weaker, yen is still generally weak. Okay. So one of the things we did yesterday is we went through the calendar and we said there was lots of Japanese news to pay attention to listen to. There was a press conference and everything. Did anybody do it? Sangam says, what do you do for burnout? I get in my car, I drive to a poor neighborhood, and I drive around. And I'm like, F this, back to work, buddy. Okay. All right, cool. Nuno did. Congratulations. Theta said no change. Well, that's not actually true. So did you read the report? Did you listen to the press conference or what? I don't care. Like if you looked at a calendar and it said 0.1% and it came out 0.1% and there was no change. I don't give a crap about that. What the heck is that? I don't care about that. Give me the juice. Okay? Did you read the reports? Why is there no inflation in Japan right now? Is anybody going to answer? Why is there no inflation in Japan? Oh my God. Daniel nailed it. Awesome, dude. Yeah, so they're changing or have changed the CPI basket. And one of the major political campaigns right now by the Prime Minister, right? Suga. Suge Knight. Suga. Pour some sugar on me, right? Prime Minister is trying to say, hey, man, we need to drive down cell phone fees. And along with that, they've added that falling cell phone mobile charges to their CPI basket. And so what the Bank of Japan said is like, yeah, look, dude, you keep changing the basket to in a way that lowers the CPI, then it lowers the CPI and there's nothing the Bank of Japan can do about it. They're like, look, right, if the cell phone prices were high, then it would be inflationary. But the government has a campaign to drive down these prices and add it to the CPI. So they're like, look, what does that have to do with central banking policy and monetary policy, right? Right? Does it impact money? No. Does it impact the velocity of money? No. Does it impact the prices? Well, yeah, it lowers the prices, right? And nominal GDP. Does it impact any of this? Well, you're kind of doing this a little bit. The problem is it doesn't have anything to do with the monetary policy. The government is lowering the basket, so there's less inflation, and the central bank's like, well, there you go. What do you want us to do about it, right? Okay. Interesting, right? So, yeah, they're just lowering the measures of inflation, so there's less inflation. Okay. So Daniel nailed it, but right, and then LIBOR did after, but I don't know if I'll give it to Daniel. But no one else knew that, huh? I think it's pretty clear if you've done the research. It's right there. Broken math formula? Well, okay, so they say they expect core inflation in 2022 and way out in 23. Yeah, one of the things they're looking at is oil prices too, but they're kind of ignoring them now. Okay, they consider the move from let's say $60 a barrel down to $0 a barrel back to $60 a barrel. What they're saying is, okay, nothing actually happened over the course of those 3 years. Right? But if your math and the math formula is including this period only and has dropped this period in the calculations, then your math will say, oh my God, there's huge inflation. And they're like, no, not really. This is an exogenous shock. This is, an outlier. Going from $60 a barrel to zero is an outlier in the normal the standard deviation of normal prices. It's certainly not supply and demand. And what we were talking about is oil falling from 60 to zero was not supply and demand, but a price war. Right? And then on top of that, COVID hit. So then there was a price war, and then demand collapsed and all this kind of stuff. And then we were oversupplied and all of this just gobbledygoo. But now that we're back to 60, what the Bank of Japan is saying, and by the way, you could read this. This is what they talk about, is that going from 60 to 0 to 60 just simply is 60, right? It's just simply 60. And that that they're going to ignore this shorter term issue in the math. They're just going to ignore it and just say, you know what, price for oil is 60. It used to be 60. It's 60 now. Nothing inflationary has happened. Yes, it went from 0 to 60, but we're ignoring that because that's not good math. And it makes sense to me. Okay. Sangham says, do you have more book recommendations besides Adam Smith and Daniel Yergin? Well, I am starting a book club. I hired someone to build it for me. He got about 80% done, and then he died of COVID. So that project is currently on hold, but I would like to read the top 100 investing books of all time. So why don't we just read them all? Okay. Okay. But you would still have a bearish bias for Japanese yen. Yeah, I do have a bearish bias for Japanese yen. I do. For sure. The only thing that's changed between, so we're basically May, right? The only thing that changed from March to May is that in and around the opening of April, I want to see more dollar weakness. But, right? And so I'd be sort of like, I think what I said is sort of a more long term, meaning like the next 6 months, neutral-ish to bearish on Japanese yen, and I went from neutral to bearish on dollar. Okay, but I'm certainly not bullish, and I was, certainly not interested in buying the Japanese yen. But it may become over the next 6 months less bearish. Okay. Anyway, so what I see here is like draw it maybe with arrows. Sort of like what's the average in here, right? Could you see that there's sort of right now the yen is weak and the dollar's trying to get weak again, but nothing is really happening in the moment. Okay, so you have to think about, well, the rest of the month, the rest of next month, the rest of this week, so on and so forth. Okay. Does anyone want to like try to get strong versus weak? Pound yen. Okay. Okay. So what do we know about that? Okay. One of the things we've been talking about is front running next month, which means you probably have already had your opportunity. Okay. And you'll say, well, Wayne, how do I know to take the May trade way out here in April? Well, first of all, are you a bull? If you can't answer that question, forget it. Okay. And if your answer clearly is yes, okay, great. Here's the next thing. The weekly swing is M2 to M4. So you bought it Sunday, right? And you're like, no, I don't trade Sunday. Well, then forget it. You're not doing it right. If you haven't decided to be a bull or a bear, then you're never going to get it. You're always going to see these trades and say, you'll see them after the fact and say, oh, I wish I would have bought down there. Well, you weren't a bull, so why would you have known to buy down there? Oh, well, my MACD was going to tell me and it wasn't quite right. You know, dude, you're not using the tools, okay? You're not using them right. So if you are a bull, great. Here's how you swing trade. You buy here and you go there on Sunday. If you don't do that, you're not doing your job and you're going to be mediocre, and that's that, okay? Now you're like, well, Wayne, how do you know it's going to go up? I don't know if it's going to go up. But if you don't know if you're a bull or a bear, you don't know what to do, so it ain't going to work anyways. But I can tell you, if you're a bull, you buy this. And if you're a bear, you're going to sell that. Oops, that was supposed to be blue. Okay? So bulls buy here, bears sell there, and I don't know what everybody else does. Probably lose money. Okay? Because here's the idea. If you got a trade opportunity up here as a bear, you'll probably be in a situation where you can move your stop to break even, and it does this, and you don't lose any money. And the bulls make money. But if the bulls are wrong, bulls will buy here. They already have an opportunity to move their stop to break even. And if bears take over, they don't lose any money. Bulls and bears generally don't lose money. Okay? Do you understand that? Bulls and bears typically, generally, let's say, don't lose money. It's everybody else doing other things. If you're not a bull or a bear, you're a pig. And pigs get slaughtered. Okay? So it's pretty simple. Okay? Is this support? Yes. Great. Okay? Can you try buying here Sunday afternoon at the M2? Yeah, it's your job. Every swing trader on the planet can see that with their eyes closed, in fact. Good. Where are we going? Right here. Are we going to go higher? I don't know, dude. I don't know. But are you bull? Buy it. Jam your stop now. Let it run. Is it going to go here? I don't know. But if you're a bull, you buy at support. Now you're able to reduce your risk or remove your risk. Take the shot, bro. Okay? Now, here's the cool thing. If you're front running, which means even though it's April, you have a May plan. Okay? You understand? If you haven't planned May yet, you're behind. Okay? You should have done it last week. And you're like, Wayne, dude, there's no way. Last week was like the 22nd of April. I know. If you didn't plan out May, you're behind. If you don't even plan out May, then you're not even in the game. You're just a liquidity event for those that make money. Okay? Cool. So here's the thing. Here's the front run. If you're a bull, okay, this is your buy. And if you're a bull, this is your target, your conservative target for May. So you probably bought this on Sunday. It's Tuesday. Okay? So you bought it on Sunday at 5 p.m. when the market opened. You got your price. You're right at support. hey, it's not the world's greatest trade. It's a range trade as far as we're concerned. Okay. But, you know, if bulls get this correct, yeah, it'll probably do some sort of dipsy-do and work its way up. Good. And you'll have plenty of opportunity to remove your risk. Whether it goes in the net or not, I don't know. Okay. Okay. Coolio, right? So here's what's going to happen in May. It's going to drop to 47 or it's going to rise to 55. So what's the question you're going to ask me? You're like, well, Wayne, which one? Well, if you're a bear, you think it's going to go down to 47. If you're a bull, you think it's going to go to 55. Now put some tactical trade plans together. Okay. Okay. Sure know what I'm talking about? Now, you might also say, well, hey, man, how do I know it doesn't range? Well, it could. That means the trend is dead. And that could happen too. So we could go from, let's say, sort of this area. And that would be disappointing. And the daily 55 kind of hints to that. Did you notice? It says, well, all right, well, we'll deal with that when we get there. It's still support. Buy it, jam your stop, let it run. Take the shot. You got a free look at the net. You're open, take the shot. No, I'd rather pass. Okay. So anyways, you're going to have a lot more conviction. If you're one of these traders that ask you to think this way, like, well, how do I know it won't go down here? And how do I know it won't, how do I know it won't be sideways? Or how do I know it's going to go up? You don't. So when are you going to make a decision? Well, how do I make a decision? Oh, did you do any research? What's your opinion? I don't have an opinion. Yeah. Okay. Okay. Right? Now, it's maybe you have missing pieces. And that's where you got to, you need to focus on your education. Okay. Cool. Still stuck in the middle. Still, if from this period that we're measuring, which is what, February, I guess? Okay. We still have a negative slope to the mean. Okay. Right. So we're looking at the rise over the run. Okay. So statistical analysis will tell you the rise over the run is less than 0. So it's still, bearish. Now you might say, well, Wayne, I'm looking at this more range bound. Oh, I see what you're doing. That's fine. You're doing it this way, which is totally fine. This is just statistical analysis. It's got a negative slope. You're like, well, but no, it's not my opinion. If you're measuring from the beginning of February to now, right, then your data set is all these candles. So by measuring this data set, it's just statistics. It's just math. It's right. It's got a negative slope. So in the moment, based on this analysis, it's still bearish. Does it mean it is bearish? Well, it's got a negative slope. You have to determine more than that because, you could look at statistical analysis as like technical analysis. It doesn't tell you if it's going to be here or here. It just tells you the data set that you're measuring has a negative slope and that within this average, because that's what it is, it's really a negative slope. Actually, let's try to draw it. It's a negative average slope. Okay. And right, so it says, okay, the mean has a negative slope to it, and there's a standard deviation below it and a standard deviation above it. That's all it's saying. It's not telling you to buy or sell. That's your job. All right, cool. So anyway, so now we look at this, and now you need to do some other kind of research to say whether it's going to be here or here or here in 6 months. And what did I say yesterday, the day before, last week, and the week before that, and probably the month before that? You should spend some time on the EIA, IEA, OPEC websites. Wait, or you could do it this way, EIA, IEA. You could add to API. You can add API to this. Okay. So this is the U.S. government. Okay. This is the anti-OPEC. This is OPEC. So this is a cartel. Okay. This is a cartel because the Western world was raping and pillaging the Middle East back in the 50s and 60s. And to the point where they rebelled and said, well, we're going to band together to protect ourselves so that you don't screw us over anymore. And it made sense. So then OPEC formed. And then the Western world said, oh my God, they formed a cartel and we're going to have to pay more. So we have to create our own cartel. So this is like the OECD cartel. This is very much sort of Middle Eastern, North African, plus Venezuela, right? Oil producers protecting themselves, and right, and these are the oil buyers protecting themselves. And then API is, I think this is it's just an industry site, right? Industry site. So they're all different, and they all do their own research. They have their own PhDs. They have their own methodologies and data sets and opinions. So you can look at that. Yeah, and then on top of that, I said Exxon, Royal Dutch Shell, British Petroleum. They also have fantastic resources for you to become, like, just for you to have an opinion about the next 6 months to a year. So I used to attend, I used to watch and review and analyze, for example, British Petroleum CEO, Corporate Outlook. Okay. And they tell you about demand, okay, transport, and then even things like, their research and development really is just going out and finding new sources of oil and gas. And, they tell you about everything that's going on. It's very transparent, and they can tell you, I mean, think about it. Do you think British Petroleum, right, Shell and Exxon, for example, do you think they spend some time analyzing what future demand is likely to be so that they can match up supply just perfectly? Like, oh my gourd. They probably spend $100 million a year to try to figure out how much oil do they need to produce in the next 12 months. And then they'll tell you. So it's really funny when somebody says, I don't know. I don't have an opinion. I don't know. I'm like, okay. Value creation. That's why I say focus on value creation. Is there resources like that for metals? Probably, but I'm not a metals trader. You mean like gold? Or do you mean like iron ore or copper? Probably, yeah. No, Daniel, it has nothing to do with interest rates. It has to do with being a reserve currency. So if central banks around the world say, oh my God, right, we need to have Brazilian real in our vaults. We just have to, because the world is demanding it, and they're pricing all business transactions and commodity prices around the world in Brazilian real, right? We need real. When it's a decision, then that's that. When the world suddenly demands this currency because they want to price everything in that currency, then it becomes a reserve currency. They have to have it on reserve for supply and demand. But it's not interest rates. Or maybe it is interest rates, but it's whatever. The world could demand, offshore yuan. The world could just demand, everything has to be priced in Bitcoin. Then every central bank in the world will have to have lots of Bitcoin on hand. Right? So it has nothing to do with interest rates. Okay? And of course, it becomes a self-fulfilling prophecy. Everything is priced in dollars because everyone's using dollars to hedge their exposure to dollars, and every central bank has the dollar. So, all of a sudden it just is a reserve currency. Okay. Yeah. So Swiss franc is kind of sort of a pseudo reserve currency. Not really, because oil isn't priced in Swiss francs and stuff. But, it has something to do with risk on and risk off. And Swiss franc is probably the least fiat currency of any OECD. Probably, well, I say probably, I'd say is, because the last I looked, it's got something like a certain percentage, less than 50%. I was going to say 40, but it may be even less than that. But every time the Swiss National Bank creates a Swiss franc, they have to buy some silver, for example. Sangam says, yeah, Bitcoin is a reserve currency. Well, it's not even a currency at this point, right? So. Ba-ba-ba-ba. So anyways, we're looking at gold, waiting for our little pullback. So we have this little trade plan. And since we've created it, gold has just stopped really moving. How awesome is that? So every time it doesn't fall, it's going to slightly move. And I think we already talked about this. It's going to move the pivots up. And you can see I have this 50% lined up. And I think at that time, 117.37 was approximately May's M2, but even that is creeping up now. And I think the 382 is about the central pivot, and that's creeping up, not because it's rising, but because it hasn't fallen. Remember the math. Low plus high plus close. So if it closes here, it'll pull these down. If it closes here, it'll pull them up. If it closes up here, it'll pull them up a lot because it'll be extremely bullish. But right now, not down is enough to say, well, it's closing high. Why does this matter? This is sentiment. Okay? Gold was very bearish. Okay? Then went neutral, which we had planned in advance, by the way. Okay? We were bulls in April for gold, and sure enough, right? It's up. But the thing is, this central pivot is going this way, which is saying, if you didn't understand the math, it wasn't bullish here. That was an opinion. That was bias, but the market wasn't bullish yet. But this step up means low to high. That only means it went up. But where the period closes is what was the sentiment at the end of the period, because that could lead to future similar sentiment. So if it was sort of bearish for a while and then neutral for a while and then makes a higher high and closes high, relative to where we started. Then it went from bearish to neutral to bullish and is now staying bullish. So May has a higher tendency to be bullish too. So I love pivot points for many reasons, and one of them is it's really a sentiment indicator. What time frames are the indices? Whatever time frame you want. I have mine on hour. It could be 4 hour. It could be daily. Whatever you want. Depends on your style of trading. Okay. Let's drop into the bitty coin. Bitcoin. Cool. Okay. No real pullback here. Okay, so that's that. Oil's trending sideways, but even though this is, okay, let's just make one other point here. All this tells me is if I'm a bull, market conditions are not quite bullish yet, but I can be buying these dips, okay? I'm just not expecting quite yet much more than going to the upper bounds of the standard deviation, right? So you could buy down here as support, okay? This is a simple 1, 2, 3, right? So don't get caught like you can't trade this. No, you totally can trade it. The thing is, because there's a negative slope, you're just like, well, it could also do this. Technical analysis overrides that in the moment. So really what you're thinking is, more likely we're going to do this. And then your bias is going to try to pop this up. Okay? You got to be careful because what it also says is this. Okay? And probably we'll want to reset here. What you don't see on this chart is we know. Oh, I see. I've asked you to do it. So I don't know if you're going to do it. How many times have I asked you to look at where we are and within the 5-year range? How many times have I asked you to do that? Where are we within the 5-year range of oil inventories? How many times have I asked you? And the second thing is, within that, what does the seasonality of the 5-year range look like? So now you know where what the seasonality is, where we are within that normal. Okay. I was gonna blurt something out. I'm gonna hold it back again. Just do it. Just do it. Look, dude, if you just did it, you would know. You'd have a very clear vision of this future for the next 6 months. So, yeah, I'm not going to give it to you. Too cranky today, I guess. It's simple work. Do it. All right. Let's talk peso. I want to talk about peso here. All right. Did anyone pay attention to MX and X minus M? Can I do this? MX and X minus M. Did anybody pay attention to that? Is Trader's Way monthly or one-time fee? That doesn't make any sense, Wayne Brown. They're a broker. And there's no fees for a broker, but you either pay a spread, which is soft dollars, or you elect to have an ECN account, which essentially doesn't have a spread, but you pay a fee. So you either pay hard dollars or soft dollars. But, right? But the business model is the same as any other broker. Okay. All right. All right. So recently, two things came out. Okay. Mexican exports. That's what X minus M is. You want to find out, are they exporting well, because they're an exporter. Okay. And also some leading indicators came out. Okay. So what that'll tell you is what has the past been like? And then you have to extrapolate, what do you think the future is going to be? Okay. Wayne Brown, they $10. I don't know anything about that. Okay. So if you're looking at export data from the past and you're looking at leading indicators and extrapolate that, you may have an opinion for where we'll be in the next 6 months. Okay. Will we be down here at 1850? Okay. Roderick, it's not that Trader's Way doesn't serve Chicago. Yeah. Everybody loves Chicago. Lovely. So, anyways, that information came out, and okay, good. I hope you got it. Okay. Yesterday I bailed on this trade. Do you remember? I was short, like right in there. And I'm like, I don't know, maybe not. I don't know if I'm going to hold it. I don't think it, maybe we'll see. Boom. I got out. Literally like 3 pips or something. I think I lost like 10 cents or whatever it was. I'm like, you know what? Screw it. And the reason for it is I don't really care about the win or loss ratio. But my trade plan was, if it was going to break the support, it was going to do something like this, and it wasn't doing it. So I'm like, you know what? Give me my money back. Right? I'm out. Okay. And yeah, looks like it was the right decision. Cool. So now I have to figure out, do I want to sell it higher or do I want to take a walk? The other thing, of course, that you have to ask is this dollar strength or is this rand weakness, and so on and so forth. And if I was going to sell again, where would I sell? Okay. So, yeah, got to do my job. Unfortunately, I have to do some work. So maybe I sell around 1450. Okay. Yeah. Could be a rabbit. Could be. Okay. Camper says, hey, where do I get training? Well, I've been running FX boot camp for about 20 years. Give that a shot. Mm-mm-mm. 20 years, 20 years. 20 years, 20 dwarves. I guess we'll have to do some dollar stuff. Let's do some dollar. Where do we want to go? Euro dollar, I guess. Lovely. So I set up this trade plan for you guys yesterday. Oh my God. Oh my God. Oh my gosh. Look at that, huh? I don't wear contacts. I wear glasses. Lovely. Oh, sorry. La 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 la. Cool, right? So Wayne Brown says Aussie yen, please. Well, you know what? If you showed me this euro dollar plan, I could probably set up 15 different trades. Like, what more do you want to know? If this is going up, this is risk on growth macroeconomics. So you should know what to do on Aussie yen. You should know what to do with gold. You should know what to do with oil. You should probably, so you got Aussie yen, euro dollar, gold, oil, and Bitcoin. It's all right here. This represents 40% of our $6.6 trillion a day market. If this is doing this, you have everything you need. Yeah. So if you're a bull in that case on Aussie yen, after looking at this, you buy the dip, ideally at support. What indicator do you use? Doesn't matter. Do you use Elliott Wave? Sure. What about RSI or stochastics? Yeah, whatever. How about CCI? How about the was there like a dragon, a rune oscillator? Like there's all these weird oscillators and indicators. Any of these. I'm sure you could use anything here and get yourself into Bill Williams. I don't know anything. Alligator. Use your alligator indicator. If that gives you strength to buy, just buy it, dude, if you're a bull, right? So here's the thing. If you know you're a bull, okay, this isn't quite a higher high, so I'd be a little careful. But still, what do we know? We buy higher lows, right? Bulls buy higher lows, right? Cool. So that means somewhere between here and here, you're going to buy it. Now, Fibonacci says, well, 3A2, 50%, 618. Now, I'm a fancy pants. I don't believe in 3A2. I believe in 33, 50%, and 66. I love how people just Fibonacci is magic. It's the way a sea star grows. Are you retarded? Right? It's just funny how people do this in their training courses. They're like, Fibonacci, it's magic. It's the universal truth. It's how nature works. It's how sea stars grow. Right? Have you guys seen these things? It's how pineapples grow. It's how a cherry tree blossoms. And you're like, are you mad? Are you mentally deranged? Do you actually believe that? It's so funny. And so my point is, Let's ignore Fibonacci, but you use 33, 50, and 66. And you're like, how do you get to that? Well, 1/3, 1/2, 2/3. And you'll do just fine. Right? I mean, you'll do just fine. Oh, but what about the C star? Yeah, what about it, bro? How much did you pay for that course? Right? I just find these things funny. You're like, you can't be serious. You can't. That's what you do for a living. Can you imagine? Why did you buy that trade and lose money? Well, see, according to how a C star grows, I decided to invest your money. It's not my fault I lost your money, but if you look at the surface of a pineapple and you count up how many corners and how many turns and how many diamonds are on the, you're like, oh my God. Anyways, so you decide you want to buy a dip. How about why a dip? Because you decided this is support, and you decided because it launched off support that there are buyers, and so you can't buy a high because that would be negligent. So you want a sweet deal. So you're like, come down a bit and I'll buy it. Good. And if your alligator oscillator, whoever invented this, is, just as cuckoo as Fibonacci, like, who cares, dude? But the thing is, use something. Make some sort of decision. If you're like, oh, the Arun indicator is now acting like a dynamic level of support. Good, then buy it. Hey, are you going to buy the dip or not? Well, did you buy it because of the 5 EMA? Did you buy it because of the 21 EMA? Did you buy it because of the 5/8 crossover? I mean, dude, are you going to buy it or not is the point. And are you going to buy a dip or not? So what I said yesterday is this high says somewhere around here you should probably buy it. You mean like this? Yeah. All right, so you didn't buy it. Maybe you did, maybe you didn't. Okay, so now what? Well, how about after this giant launch off support, you're like, you know what? Maybe Wayne was right. That seems like this was a reasonable level of support. It was a midpoint psych level. This is a higher high, so there's going to be a higher low. This is a 3A2. This is a 50%. And you're like, that's pretty reasonable. The next level of support is the 618, but right now we're playing the 50%. 50% predicts the 13A2, which is essentially up. So now that we're here at a higher high relative to this one, I'm going to buy a higher low somewhere around, I don't know, there. And so you're like, okay. Theta says, by the way, this euro dollar is a trade for May, weekly swing. Oh, is that right, eh? Yeah, could be a rabbit. Okay. Look, you're going to get better, consistent results when you start trade planning seriously. Okay. So all of this should be like, are you buying dips at rule reversals? Okay. Okay. If you just show up and all you look at is this. Okay. Some of you guys are even just looking at this. You're not looking at enough data. There's no opinion here. All you have is price. Okay. Once you have sort of a basis of what we're doing, you're going to get better. Where are we in the move? How much move is left? Am I buying dips or not? Well, let's look at what I teach you in price action, right? Here's the highest high at that point. Then you have your higher low. And then you have a new higher high, which predicts a higher low. Okay. Now, what I like to do is I like to look at these old highs, and use this as a guesstimate of where the new buying is going to be. So I look at that and eyeball it, and I'm like, yeah, somewhere around there. We call that price action. There's a whole price action course at FX Bootcamp. If you don't know how to trade price action, you're not going to be successful. I don't care what price or what time frame you're on, whether you trade a 1 minute or a daily chart. If you don't understand price action, you just don't understand how the market works. Okay? Now, fundamentals and seasonality and macroeconomics, this is the mechanics. This is the clockwork. Okay? This is the clockwork. So you could predict, if you knew how many seconds there were in a day, how many minutes there were in a day, how many hours there are in a day, and how many cycles of the 12 hours on the face of the clock there are in a day. Because you're like, it's weird. There's 24 hours on a clock, but there's only 12 numbers. So there's some sort of weird math going on, right? So in the beginning, you're going to need to learn how to tell time. Forget about understanding quantum physics, right? You don't have to learn quantum physics. Start with learning how to tell time. And that sometimes when the hand points to the 12, the sun is above you. And sometimes when the hand points to the 12, the sun is below you. And you're like, oh, that's a stark difference. It's the same thing, but it means the opposite. So you're going to really have to learn the difference between day and night in the cycle. Okay, cool. Right on. And throughout the year, that changes too a little bit. So you're going to have to learn about that. But ultimately, the most important thing is, you should be eating lunch at 12 p.m. and you should be sleeping at 12 a.m. And once you get that figured out, that's good. You could probably live a pretty normal life. The next thing is understanding the clockwork, the mechanics, like how does a clock work? And you start understanding, like I said, the seconds, the minutes and the hours and stuff like that. Maybe even, you start understanding all this kind of stuff so that you can sort of predict a little bit ahead versus just saying, oh, I guess it's lunchtime now, right? Right? And then I suppose at some point, quantum physics wouldn't kill you. Because now you can oh my God, I can travel through time? Well, mathematically, it's possible. Okay. So, I don't know. So there's technical analysis, there's fundamental analysis, there's news, there's macroeconomic data, there's monetary policy, right? C plus I plus G is equal to wages plus interest plus profit plus wages, interest, and profit. Which one am I missing? Does anyone remember this one? I never do this one. R. There's an R, isn't there? Wages plus R. I'll put R or something. Which is, right? Does anybody know? You have to Google it. Which is, then you can calculate this as nominal GDP GDP, which is also what? Y times P. They're all the same thing. This would be money times velocity. Anyways, you don't have to understand all that in the beginning. Eventually, you're going to have to know. Wayne Brown says, seasonality, how do we clue in? Years of experience, technical history. Yeah, why don't you join fxbootcamp.com? And in 50 to 100 hours, you'll be of watching videos and hanging with the live group. You'll have a better knowledge. Okay? But you're asking a farmer, how does he predict winter and spring and fall? And he's like, ooh, you should probably start with a calendar and come back. Okay? So literally, like here's the real thing, Wayne. If I'm talking about stuff that seems really interesting to you and you're like, wow, that's I never thought about that, or this methodology that he's using seems really intriguing. fxbootcamp.com is just where you start. Okay. Oh, okay. Well, then you got it. So then seasonality is part of that. We talk about it a lot, Wayne. But anyways, thank you for being here then, Wayne. Right? But seasonality, yeah, you're talking about, again, it's very similar to a farmer planting, right? Yeah. Boo boo. Yeah. Oh, and thank you, Ace. Yeah, and I forgot to thank you last time, Maida. Thank you. Okay. What's going on with these massive candles? Well, it's just that it's just the chart, how I'm zoomed. All right. So let's go. I guess we're on this one, kitty cat. And by the way, if I sound pissy today, I guess I kind of am or something. Oh, you guys, it all goes into my wine account. Well, the farmer uses the farmer's almanac. Yeah, okay. Then, yeah. Then every Thursday when we get together in the swing trading group, it'd be like your almanac. All right, so let's put this together. So I shorted this on yesterday, I guess. Yeah, I guess it was yesterday. So how are we doing? Let's switch the template. Let's do day trading bearish bias. And we have no drop. We were supposed to get a drop today. It has not dropped. And we're just waiting. We're just waiting. Looking at it from an hourly candle point of view, we should be kicking off the 21 EMA now, that the stock market's opening. So hopefully by noon, this will be testing support. And by the end of the day, trying for a new lower low. Okay. Couple of things going on. Earnings is a big thing going on right now. We got FOMC tomorrow. Well, it starts today. FOMC. And there's a bunch of other news related stuff going on in the world. So, we're hesitating, waiting, and there could be some up before there's down, and that's going to be news related volatility. Excuse me. So, right. Some white Hennessy. Nice. So Wayne, you say you've been around a long time, but there's a lot of new content at FX Bootcamp, and I don't know if you have the newer stuff. So I don't know. No cigars. Yeah, I won't spend that money on cigars, Maida. But I'm in the process of enjoying a Monte Cristo 100 days. And they're nice and they're perfectly constructed because they're Monte Cristo, and I've had them in my humidor for over a year. The funny thing about them, though, is they smell like hay. Whatever it is. Volume 1, 100 days. And images. Just doing Google. Yeah, here it is. So I had a couple of boxes of these. They're really nice. And they come in these great boxes. They look like books, like the Count of Monte Cristo. Anyways. Don't know any of these. Cigar Dojo. That's kind of funny. Let's see. Yeah, they don't have any. They're nice though, right? Cool looking, right? Anyways. So. Yeah, they smell like hay. It's really strange. And I've had them for a year, and I thought maybe they were just young or something, but Monte Cristo doesn't typically do that. And they're very old. It's older age tobacco, but you smell it. And I smoked half it yesterday afternoon. The sun was setting over the lake was just quiet and everything. So I was just out there taking a few moments right before cooking dinner. Actually, I got the chicken going and the vegetables going, and put everything in the brassiere and put that into the oven, and then went outside and enjoyed a cigar and a wine. And sure enough, I'm like, you know what? It still smells like hay, right? What would your daily research be today? Okay, so let's talk about daily research. All right. So what did I talk about today? The Bank of Japan report. Okay. And I talked about Mexican exports. Okay. 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 Ken says, hey, Wayne, would you day trade? I love day trading. Right? I love scalping. I just do it a little bit differently, and my expectations have actually changed. So I used to traditionally scalp. Risk 15 pips to make 15 pips. And I did a scalp for you guys 3 weeks ago. I did a scalp for you live, and I'm like, I'll even take a bad trade at a bad price. But I know there's, 30 pips left into this. Watch, I'll pick up 15, right? And sure enough, it picked up 15. But I told you I was going the wrong way against my bias. But I'm like, scalping doesn't technically have a bias. And so I hit my target. And I believe I shorted the Kiwi dollar, picked up 15 pips, risked 15 pips. And then by the end of the day was way up and then went up and up hundreds and hundreds of pips. And that is my point where, look, I could scalp it down and make 15 pips, but it's hardly any money, and I'm going against my bias. Why wouldn't you just buy low and have it go up 200 pips, right? So then over the course of time, so like let's say that was the sum of my first 5 years of trading or something. Then in my second 5 years of trading, I realized I can still scalp, but if I scalp in the direction of my bias, I can still buy on the short term. I can maybe risk 15 to 25 pips, but go for 200. So I used to do this stuff like way back in FX Bootcamp days, early days. I used to show people like, look, I'll scalp 100 pips. People were always like excited. Oh my God, he scalps 100 pips, right? And it was really cool because people would join FX Bootcamp because they're like, they're used to seeing people make a trade and make 20 pips. And they're like, that is so good. Oh, he made 25 pips, right? And I'm like, watch. And I would open it up on a 1 minute chart and I'd say, wait for it, wait for it, wait for it, wait for it. Okay, now click, right? And I'm like, I'm going for 100. And they're like, 100 pips? I've never even made 100 pips in my entire life, right? And I'm like, I'll do it on a 1 minute chart. All right. Well, here's the funny thing, of course. I have a trade plan and a bias, right? So it's sort of like almost a smoke and mirrors type trade because, you start with your plan here and then you go with the plan here and then you analyze all these time frames, right? And then in the moment, I don't think I could even go back on a 1 minute chart now, but so let's do a 5 minute chart. In the moment, I'm like, look, I'll sell a 5 minute chart. Right now, imagine you're zoomed in. So all you see is basically this much time on a 5 minute chart. And it looks like down and it looks up. You're like, nothing's happening. And I'll go like this, sell. And oh my God, look at this scalp, right? And do you understand my point? All you're doing now is selling in the direction of where it's supposed to go anyways. Well, how do you know it's supposed to do this? Well, macroeconomics, fundamental analysis, seasonality, news, all of which you incorporate into a bias. And off she goes. And now you're scalping, and ultimately you're still entering your trades exactly the same. A 1 minute chart, a 5 minute chart, a 15 minute chart, an hourly chart, it's all the same to me. Because, right, the only thing is I spend more time on value creation. So whether I trade a 1 minute chart, a 5 minute chart, or a 15 minute chart, let's say on an entry, I'm trading in the direction of the trend. And because I have that value creation, the trades are just worth more. Okay. Now, sometimes in here, there's little smaller trades and stuff like that. That's fine. But your ability to scalp, right? Scalping your fundamental bias. Oh my goodness. All it does is help you get into your trades at better prices. Right? Okay. Okay. So I scalp into my spot, I spot in my swing, I swing into my carries. Okay. Richard says, I'm confused about seasonality. Is that considered risk on or risk off? No. No, because that's macro conditions. Okay, so let's put it this way. All right, let's try to explain it this way, guys. Let's say my opinion. Let's move this out. Okay. Let's say my opinion, well, April 19th or something, I said sell the US dollar for 5 years, right? Does anyone concur? Somewhere around April 19th, I said sell USD for 5 years. Okay. Okay. Yeah, cool. So I have a bias. Okay, does this mean straight down? No, it means throughout the period here, you're going to have down and up and 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 down, and variations of this. Now, you might think these are random moves, but very often they're not random. Okay? Okay? Okay, so for example, during this period, it continued down, okay, but at a slower pace, and in particular this area here. Okay, this is what we call summer. Okay, this is when I was a crazy aggressive, right? This is the election. Now, typically I'm crazy aggressive in this period. Oops. Usually I'm crazy aggressive in this period, but this year I pushed it off to this period. Why? Yeah, the election. Okay? But we had talked about this. It was the fourth year of a 4-year cycle. And that if we're in the third year of a 4-year cycle, I'd behave differently. So instead of being aggressive there, I changed things. Okay? And this is this since. Okay? So anyways, we had this move planned. We had this actual sideways planned. And then we had this re-entry planned. And then this continuation all planned. Okay? And so there's cycles in here, and that's what seasonality is. Time to be aggressive, time to be conservative, time to be aggressive, so on and so forth. Now, how does one possibly do this? Well, you might want to look at it like, spring, summer, fall, and then this quiet period here is actually winter, right? And now we're re-entering spring. So if this is winter, maybe this is spring. Okay? Excuse me. So these are forces, okay? So fundamentals is the study of economic data relative to monetary policy of a country. Macroeconomics is the study of countries and the cycle and flow of money around the world. Fundamentals is the study of economic data relative to monetary policy of each country. But seasonality doesn't have anything to do with that, per se. Okay? I mean, it matters because it kind of changes the direction of this, but seasonality isn't the direction. It's the ebb and flow of the tides. Think of it that way. Okay? Think of it as the ebb and flow of tides, or the coming and going of the seasons. Okay? Seasonality for 5 years. No, season would be 1 year. That's a season. Okay. Fundies, fundamental analysis, can lead to a bias of years, for sure. Oh, for sure. Okay. So a farmer generally knows when to consider planting seeds. A farmer generally knows when to have to add fertilizer or pesticide. A farmer generally knows when to harvest. Okay? But they don't know exactly which day. Every year they have to analyze things like the conditions instead of market conditions, environmental conditions in which they should be tilling the fields and planting the seeds and, all that kind of stuff, and down to the harvest. Okay. Cool. There's a discussion going on in the chat about Bloomberg. Yeah, I have tapered my how do you say it? My exposure. I've tapered my exposure to Bloomberg. Yeah. No, there's no macro lecture today. Sorry. I swear to you though, yesterday I spent probably a good hour with textbooks, reading and thinking about how I can incorporate some of these ideas into the lectures. I wasn't happy with the last lecture, particularly the end, and I want to expand and compound on the idea of the business cycle. So I think I might maybe do a second business cycle one, sort of like that was a setup to business cycles, and then I want to do a deeper dive in business cycles. But then I want to explain, for example, how how one gets to from peak to trough, but also is it good or is it bad, and why do these cycles go there? And so, one of the things I'm thinking about is, like, we know like entrepreneurialism as a factor of production could lead to greater than potential GDP, and trade could lead to increased levels of productivity above potential GDP. But then I want to also start tying in why these cycles change. And so I'm like, okay, how do I want to discuss things like inflation, which is sort of a cheat on growth? So we isolated real GDP from nominal GDP and per capita GDP to kind of get a better understanding of true growth, real growth, not fake growth, not illusionary growth. And so I thought, well, I should bring some of these concepts back, like, okay, so you have less than potential GDP, overshoot into, above potential GDP growth, and then the rotation back to, let's say, equilibrium. Well, what kind of sets that up? And very often it's like inflation, but we like some inflation, but we want real productivity growth, not fake inflation. And so, and then what is happening now, whether it's 2008 or COVID, like the government's response, how does that sort of create these overshoots that the Fed's talking about? So I'm thinking about this with my cigar and my wine, and then I ran and grabbed some textbooks and thought, should I teach you, like, and this is what I hit you with a little bit earlier today, the quantity theory of money. Quantity theory. Okay, so I think about this. I'm like, okay, I could explain this to you. And I can see how I can pull it into going back, sort of rewriting the equation for nominal GDP, right? Measured through productivity or through expenditures. Okay, so we could rewrite those formulas and then isolate money growth into the inflation concept. But, and so now I'm like, if I do that, do I want to talk about Milton Friedman, for example? Because if you're going to do the quantity theory of money, I think of him faster than I think of anybody else. There's maybe Taylor. There's another guy you could probably bring up. And then I'm like, okay, well, that gets interesting. Do I want to start going into Keynesian economics? I'm like, oh my God, is this the right thing for me to be planning? What direction do we want to go? Does this get me off topic? So all of a sudden now I'm like business cycles into quantitative theory of money, into Milton Friedman, into Keynes. And I'm like, but is this the direction of macroeconomics that we really want to be going? So you can see, like, it takes me, and creating one lecture takes dozens of hours. So you're like, is that where I want to go? And I thought, it wouldn't be bad. So I'd have to, maybe I don't need to go into Milton Friedman. I could mention him. I could probably do a little bit of Keynes to explain 2008 and COVID, right? And then I could probably do things like money times velocity is equal to productivity over price. That's a Y, by the way. And then you're like, well, you want to divide by both sides by Y, correct? So now you get the the money supply times the velocity over nominal GDP is equal to price. And Trump and Biden have jacked this up by trillions. So you're going to get inflation, correct? And then I'll say, yeah, but, and this would be textbook, by the way. This is, I don't know, maybe, I think it's undergrad and then probably some graduate level economics. So the textbooks will tell you that that's going to jack up price and we should be freaking out about inflation and all that kind of stuff. And I'll say, yeah, but you don't understand. The guys that wrote the textbooks, the professors, everybody else, I think they're missing a giant piece. So now then I get into Wayne McDonald's point of view, and then I'm like, well, that goes back to our trade. And so how do I want to express that? And ultimately what I want to do is actually download the actual reports so you can read into these things, but you have to read through the things by understanding the bigger concepts. I don't think you're going to learn much if I just say, look, go to the let's download GDP, and when you look at it, it says 2.3%. And then if you look at GDP in Australia, it says 1.2%. I'm trying to give you these deep, almost dark secrets outside of the numbers, or let's say inside of the numbers, versus just telling you what the numbers mean. And you're like, oh, just compare the United States to Australia and you'll be fine. I'm trying to why is it that the United States can spend $3 trillion on stuff nobody needs, or let's say 90% of people don't need, and yet there's no inflation? Well, where did it go? Okay. Wayne Daniels begging for homework. Well, I'm sorry, man. Sorry, I got my own homework. These are the questions I'm asking myself on my free time as I'm concerned about your knowledge and your experience and your education in this thing we call Forex. Can you see that they're pretty big, even complicated questions that you probably wouldn't even get in school? Okay. My Harvard professor never asked me, why is it that we don't have inflation? Okay. What they'll tell you is something like, well, oops, it wouldn't be that. What they'll tell you is M over n times v over y is equal to p. So if and this would be v star over v bar over y bar. So if m increases by 10%, p is going to go up 10%. And I'm like, okay, I understand your model. I understand your math. I'm really glad you're good at calculus, because now they're going to make functions of all these things and spend all their time playing around with calculus and doing all their nerdy stuff, and then go into cosplay doing Lord of the Rings. And I'm like, dude, professor, why don't we talk about reality? Because that's a closed economy, and there's no way in hell the United States is a closed economy. So yes, maybe increasing the monetary supply by 10% increases price by 10%, but then we export a lot of that. And all of a sudden, they don't have questions. They don't have answers to that because it wasn't in the textbook. Cool. You see? Isn't that interesting? So I am trying my best, and I'm putting considerable and careful thought into what I'm producing for you. So again, my goal is to, hopefully in 20 hours or less, give you a basic overview of having a graduate degree in economics from Harvard with no calculus. Yeah. So I'm taking my time because it's enjoyable thinking about how to put it together and then putting it together. Okay. Yeah, well, it's been fun and interesting, and I'm glad I hired the PhD guy to help with the slides, because I can create the concepts and then have them work on the slides, right? But it's neat though, right? Like it's some pretty big ideas. I felt like in the last lecture, my objection was to connect some old information from previous lectures into like these newer concepts, and I thought I didn't do a good job on that, and it's a key point. So I'm trying to figure out, like, how to do a better job. I might actually have to redo it, or redo it the next time I do it. I'll have tweaks to it, because I want to make a stronger connection to these different measures of GDP, these different, like, why does the United States grow at 2.2%? We looked at that data, and how do we carry that forward? And, is that potential GDP? And, and so now I'm, there's a lot. Okay. Yeah. There's a lot to it. So cool. Okay. Cool. Hope you like economics. Yeah. Yeah, I've been on YouTube a while, man. Before YouTube, I was doing stuff. I remember very specifically, I was in Lake Tahoe, California, and I had flown my mother down from Canada. I took my wife, my two babies. I just thought my wife needed a break. So I got this like 3-bedroom suite in Lake Tahoe, right on the slope of whatever ski right there in the lake right there, and all that kind of stuff. So anyways, I just remember this moment in time where there's a magazine article about this thing called YouTube, and that it was going to be a big thing one day. And that, like Google hadn't bought it yet, and that YouTube was going to be a big thing one day. And I'm like, hey, this is the thing I've been telling you about. And she's like, what do you mean? I'm like, this thing, I've been like making videos and uploading them to this thing called YouTube. And she's like, yeah, I tried it and it didn't work. And I'm like, what do you mean? She typed in YouTube. I'm like, no. It's YouTube. And she's like, why that? I'm like, I don't know. It doesn't make any sense. So anyways, we both agreed it's a stupid name, YouTube. But anyway, so you go to YouTube, and I'm like, look, if you type in Forex on YouTube, this thing that no one's ever really heard of, right? The first 160 videos, if you typed in the word Forex, the first 160 were me. And I'm like, I think this is going to be a big thing one day. It's pretty cool. But that's the thing, though, right, Maida? Most people were not using YouTube back then. Yeah. So anyways, we're all on our journey. So I hope you guys are happy. Right? I hope you guys are happy. I hope you guys are building confidence. I thank you for being, such a positive contribution to our community. We see newer people come in every single day asking for help, and I always see people, offering a helping hand. So that's really cool. Welcome, everybody. And it's good. Wayne's like, hey, man, I've been following you since 2006. Cool. Right on. Well, I'm still here and I'm still fighting, and I'm still in love with the things that we do. This thing called Forex, it's still the best thing. So we have a big thing called FOMC tomorrow. Like I said, typically April is a dead meeting for me. They're going to say stuff, and there is going to be volatility. That's fine. But it's not likely to be a massive game changer like, oh, this changes everything. If they were going to say anything, they're going to hint in June and then expand on that idea September, October-ish. So April typically isn't time to announce something new. Typically, it's like the last meeting where they say everything the Fed did worked. We're still confident. We're still not likely to blah, 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 blah. It won't be until June when they're like, oh, we see some green shoots. I mean, in that case, it's not really green shoots they're looking for, but you get the context, I hope. If we were in a trough, they would be saying green shoots, and now we're clearly out of a trough. So they're going to say, well, there's some transitory inflation here or there, and we're not that concerned yet, and, we're not following the market. But look, you should probably know the yield on the 10-year T-note right now. It's 1.58, and it's been roughly, this 1.5 to 1.7. Even that's too high, 1.5 to 1.65. For a very long time now, many, many, many weeks. So all of that is stabilized. The bond market's not freaking out. Right now, like I said, I think we're in the process of doing what April, May, and June typically asks us to do. And then our analysis should be really focused on Christmas. How big and how awesome will Christmas be? And you're like, Wayne, we're just rolling out of April and into May. Yeah, well, we're supposed to be 6 to 9 months in advance. So if you're not thinking about economic activity in Christmas, well, let's just one thing I'll let you to think about. If you were Walmart, when do you start placing orders for Christmas toys? You want, some more Barbie dolls manufactured. When do you place orders with the factory so they start making all these toys? Remember, they have to make them, and then they have to be shipped, right? And then eventually put on shelves. So, you're thinking, you know what? They're probably ordering pretty soon. Well, that economic activity we need to be ahead of, because orders turn into factory capacity and utilization, and eventually becomes Chinese exports and U.S. imports. So if the United States is importing toys for Christmas, they're exporting their dollars. So the part of this seasonality that I'm trading here might simply be Christmas retail sales that I do in April. Could be. Could be a rabbit. Could be. Don't really know. It's just seasonal. Does the farmer actually know why there's summer, winter, summer, winter, summer, winter? You're like, wow, it's because the earth wobbles on its axis. All he knows is there's summer and there's winter, and there's a lot in between in that ebb and flow. And if you're going to plant food for a living, that you kind of have to know summer and winter and how to interact with this, in between those solstices. Anyways, cool. Thank you for being part of this community and all the positive contributions that you add to it. Peace on earth. May the pips be with you. May your profits be above average. Cheers.